So why would you want to invest in value or growth or mid-cap or large cap? If we take a look at value versus growth, for example, during the 1 year of 2020, the value underperformance, so how much value underperformed growth, was negative 32.15. Growth had gained 34.84% that year, and value only gained 2.68. So value very much underperformed growth in that year. Now, if we look down to mid-cap, we can see that the mid-cap also did worse. Mid-cap stocks underperformed large-cap stocks, but also mid-cap value underperformed mid-cap growth. If we look at the 3-year, we can see the start of 2018 to the end of 2020, mid-caps underperformed over a 5-year and over a 10-year. But what's interesting is that this isn't very normal. You see, growth has been on a tear over the past 10 years or so, and actually so have large-cap stocks. So mid-cap value stocks have very much underperformed the general market, because the large cap stocks, for example, in like a total market index, have a much better return than the mid cap stocks. And then throw in the value versus growth aspect, and mid cap value has not done well. But that does not mean going forward that it's not going to do well. In fact, the way I see it, mid cap value is probably going to have a better opportunity coming up in the next couple years. So anyway, let's go ahead. Let's find the best mid cap value ETF. We got a lot to go over. I hope you stick around. Let's get started. Thanks everyone so much for watching. I do want to remind you, I'm not a financial advisor. This is not financial advice. This is just my opinion. And let's face it, I am not right 100% of the time. So please do your own due diligence. So before we get started, let me know in the comments. I want to hear from you. What do you think mid-cap stocks right now? Are you liking them versus large versus small? What do you think about value versus growth? Let me know in the comments. I'd love to hear from you. And also, please hit the like button if you end up liking this, and subscribe if you want to see more stuff like this. And also, have some affiliate links in the description below. If anything you see down there, have some trading view links. I have some Morningstar premium links. Have some different stuff if you're interested. So let's get started and talk first about which ETFs we're going over. So our first ETF is the iShares Russell Mid-Cap Value ETF, ticker IWS. Next up, we have the Vanguard Mid-Cap Value Index Fund ETF shares, ticker symbol VOE. Then we have Invesco S&P Mid-Cap 400 Revenue ETF, RWK is the ticker on that one. Then we have the Spider S&P 400 Mid-Cap Value ETF, MDYV is the ticker. And then finally we have Vanguard S&P Mid-Cap 400 Value Index Fund ETF shares, IVOV is the ticker on that one. If you've watched any of my videos, where do I start first? Expense ratio. So first off, IWS has an expense ratio of 0.23%. Then we have VOE with a expense ratio of 0.07%, RWK 0.39%, MDYV 0.15%, and finally IVOV at 0.15%. As per usual, we ask a question. So VOE with such a low expense ratio, and then RWK with a little, it's not a crazy high expense ratio, but it's definitely much higher than 0.07%. So is RWK worth spending that much more in an expense? That's something we have to decide for ourselves and figure out in this. Moving on, I do want to tell you real quick how much assets under management each of these have. IWS, the largest of these by far is VOE, which has $30 billion in assets under management. IWS has quite a few with $14.9 billion. The smallest of these is RWK with almost $400 million in assets under management. Now these are value ETFs, so they do pay a little bit of yield. So if you're into like dividend investing, if you like yield, then we're going to talk about that here. So first off, we have IWS with a 1.48% yield, and VOE, the 1.88% yield, RWK 0.94% yield, MDYV with 0.17%, and then we have IVOV 0.79%. So the highest of these yields is 1.88%, which is VOE. The smallest is RWK. Let's talk portfolio composition. Now we're talking, of course, today about mid-cap value ETFs. We want to have mid-cap companies, medium-sized companies, as the larger part of this portfolio, of course. So if you have a strategy and you need mid-cap to fill a piece of your strategy, then you want a good mid-cap fund, right? So maybe you have a bunch of large, and a bunch of small, but you need some mid. Well, you want to have an ETF that gives you what you need in the portfolio. So IWS has some large cap in it, 12.07%, some small, 11.22%, but the majority is 76% in medium cap. So, okay, not too bad. VOE is going to be our most pure of these, the most pure mid cap with a 92% mid cap. RWK, according to Schwab, has only 42% medium cap, and then we have small at 57. So very little large, more mid-small here. MDYV, same kind of thing, mid-small. IVOV, mid-small. So if you want a pure play, VOE is going to be the most pure of these. IWS is also pretty decent as well. Let's take a look at the top two highest sector weightings in these. So first off, we have financial, IWS. Financials is the number one, and then number two is industrials, VOE. Financials is number one, number two is real estate. Also industrials is pretty high though. RWK, we have number one, consumer discretionary. This is the most different of these different ETFs. None of the other ones have a lot as much in consumer discretionary. Then they have industrials as well. MDYV has financials as number two, and then number one being industrials, and then IVOV has also industrials number one and consumer discretionary number two. So industrials is a very big portfolio allocation in all of these different portfolios, so decent weightings towards that. Also, of course, financials is in there as well for a couple of these, and then consumer discretionary is in there as well. So these are the top 10 holdings with all of these ETFs. We have Marvell. I think that's actually semiconductors. Carrier Global. We have, let's see, First Horizon Corp. These are some of the different top 10 holdings. Pause the video if you want to take a look at that. Let's move on now, and let's talk about everyone's favorite part. What are the returns of these different ETFs? So let's take a look first at the 5-year returns. So I have SPY, which is the S&P 500, just to see how this looks versus the larger S&P 500 index, which is large cap index. So remember, large cap has done a lot better than mid cap recently. So SPY, a lot better return, which is expected. RWK then is the best of these though. So RWK, then VOE coming in a little bit behind it, and then the other ones, MDYV, VOV, IWS, all under 60%. Now let's zoom into the 1 year, see how it's done here. So you can see SPY, the S&P 500, closing that gap, getting closer to VOE, and I do think that large caps might be underperforming mid and small cap companies over the next couple years. So I'm not surprised by this. I think this is probably what's gonna happen. That's just my opinion. Could be totally wrong, but that's what I think. So then IWS is next, and then we have RWK, which was the previous highest of the mid-cap ETFs, now in last place. Let's take a look closer, more recently to the year-to-date. And here you can see VOE is the best with a negative 0.71% rate of return. Everything else actually quite a bit further down here with a negative 2.75%. IWS is the next closest one. Everything else, more than a 4% decline for the year so far. RWK coming in last place, which was the previous best one. And SPY, look at that, negative 5.77%, which is what I think is probably closer to what a return might be comparatively for mid-cap versus large cap going forward in the next couple of years. Again, could totally be wrong. So, okay, let's talk. What is my favorite of all of these different ETFs? So let's go back to the expense ratios so we could take a look here. So VOE was the pretty much best or second best performing of all those different performances that we saw before. RWK was the best in the 5-year, but really hasn't done as well as recently. Now, RWK, a lot higher expense ratio than VOE, still not a crazy high expense ratio, 0.39%. It's not too high, but you can get a much better expense ratio and potentially get similar or better returns in the next few couple years with this one. So what am I going with here? I am going to be picking VOE is my pick for the best Mid-Cap Value ETF. Now, some other reasons why I do like this one. So for those who really need a pure mid-cap ETF, this thing is the purest of them according to Schwab with a 92.90% in mid-cap. So you're really getting a lot more exposure to mid-cap in this. RWK is really more of a small mid blend. So Definitely something to consider if you're looking at, between these two, something to consider potentially for your portfolio, how you construct your portfolio. So they actually use a multi-factor strategy based on value type signals or value factors to help them figure out how much they're going to weight the different stocks. So instead of just saying what's the largest company in these stocks that can go into this ETF, they're not just like weighting it by the biggest stock has the most weighting. They're doing it based on these different factors. And so these will include things like book to price, forward earnings to price, historical earnings to price, dividend to price ratio, and sales to price ratio. So different value-oriented screens, essentially, that they're using to figure out how much to put into these different positions. Okay, let's look at some technicals on this. Not going to go too crazy on this thing. It's a mid-cap value ETF. I'm sure you're not really into trading this too much. You're probably not even trying to find an entry point to this, but let's talk about it anyway. So we're going back here till about the start of 2020. This is what this chart is looking like. We have, of course, uptrend channel. It was doing pretty well. The slope is very nice comparatively to what's going on now, which is still an uptrend channel, so it's actually impressive. Little things I want to point out to start off here. Something that's bearish. We have a MACD oscillator that's, this little red oscillator here starting. That's because the MACD line, this blue line, just crossed over the signal line. That's a bearish indicator, potentially going down. We also have RSI declining, so that's also a bearish indicator. And then we have a declining price, which of course might also be showing that all three of these together leading to a potential decline from here closer to the channel, the uptrend line. And so if this thing maybe breaks out of this channel, breaks down through this could be something to watch out for. So maybe watch this area in the 145 up to maybe 146 area, and then see if this thing breaks down through it or if it bounces off it. If it gets down that far, could be a great place to buy this thing, to start a position in it. If you were looking at 145 area potentially, if it breaks down through the uptrend line, then you're looking at some different resistances. One could be $138 down to maybe let's say $133 per share. So that's it. Watch out for that uptrend line. See if this thing bounces off of it. If it gets down that far, or if it breaks down through it, then I'd take a look from there and see when to enter this thing. If I cared about that stuff, of course. If I'm investing in a mid-cap value ETF, I'm probably just dollar cost averaging it, honestly, right? So anyway, I hope you liked this video. Hit that like button if you did. Subscribe to see future content like this. Check out some of my affiliate links if you are interested in anything I got down there. Support the channel. And I got another video. It's coming up on the end screen. Please watch it right now.